Hey everyone, and welcome back to the AI Tech channel. Today, we are diving deep into a story that has Wall Street buzzing. Microsoft stock just had one of its best post-earnings days in a decade. But is this just hype, or is there something truly revolutionary happening here? Forget the slow and steady climb. We're talking about a rocket launch. Shares jumped over 7%, a move we haven't seen since the early days of Azure. The question is, can this momentum last, or is it a flash in the pan? We're going to break down exactly what fueled this surge, the risks Microsoft is facing, and what this means for the future of AI investing. Buckle up, because this is going to be a wild ride. So what sparked this incredible rally? The answer lies in Microsoft's latest earnings report. The numbers were impressive across the board, but the real star of the show was their cloud computing business. Cloud revenue shot up to a staggering $27 billion. That's not just growth, that's an explosion. But let's zoom in on the engine driving this growth. Azure, Microsoft's cloud and AI platform. Azure grew by a whopping 35%. This is far beyond what analysts were expecting, and it signals a massive shift in the market. Microsoft isn't just playing the AI game, they're dominating it. Now, before we get too carried away, let's remember that the stock market is a fickle beast. What goes up can just as easily come down. So, let's dig deeper and understand the underlying factors at play here. The key to understanding Microsoft's success lies in its strategic bet on AI, particularly its partnership with OpenAI. This collaboration has been a game-changer for Azure, attracting a flood of new customers eager to leverage the power of cutting-edge AI models. Azure is not just a cloud platform anymore. It's becoming the go-to destination for AI development and deployment. Think about it. Businesses are scrambling to integrate AI into their operations, and Microsoft is providing them with the tools and infrastructure they need to do it. This first-mover advantage is translating into massive revenue growth and a significant competitive edge. We also need to consider the impact of Microsoft's broader AI strategy. They're not just focused on one area. They're building an entire AI ecosystem, from cloud infrastructure to AI-powered applications. This holistic approach is creating a powerful network effect, attracting even more developers and customers to the Microsoft platform. This is a long-term play, and it's paying off handsomely. One of the most reassuring signals from the earnings call came from CFO Amy Hood. She noted that demand for AI is still outpacing supply. This is huge. It means that the AI boom is far from over, and Microsoft is perfectly positioned to capitalize on this continued growth. Hood's comments helped to calm Wall Street's nerves, which had been jittery about the potential impact of macroeconomic uncertainty on AI investments. This is crucial because fear can drive irrational market behavior. Her confident outlook reassured investors that Microsoft's AI investments are not just a fad, they're a strategic imperative. This also highlights the importance of strong leadership in navigating uncertain times. Hood's clear and concise communication helped to build confidence in Microsoft's long-term prospects. It's not just about the technology, it's about the people driving it forward. The market's reaction to Microsoft's earnings was overwhelmingly positive. Analysts across the board raised their price targets for the stock, with some predicting even more significant gains in the future. BMO Capital Markets, for example, raised their price target to $485, citing improved Azure growth. Bank of America Securities went even further, raising their price target to $515 and reiterating their top pick call. They specifically highlighted Microsoft's partnership with OpenAI as a major driver behind the Azure beat. Mizuho Americas analysts echoed this sentiment, raising their price target to $500 and expressing strong confidence in Microsoft's GenAI adoption and monetization levers. This widespread bullishness is a clear indication that Wall Street believes in Microsoft's AI strategy. It's not just about the current numbers, it's about the long-term potential. Analysts are betting that Microsoft will continue to dominate the AI market for years to come. Microsoft's strong performance wasn't just a solo act, it helped to lift the entire tech sector. The Magnificent Seven stocks, Apple, Amazon, Alphabet, Microsoft, Meta, Tesla, and NVIDIA, all experienced significant gains on Thursday. This demonstrates the interconnectedness of the tech industry and the powerful impact of positive news from one of its leading players. When Microsoft succeeds, it creates a ripple effect that benefits the entire ecosystem. This also highlights the importance of diversification in investment portfolios. By investing in a basket of tech stocks, investors can reduce their risk and increase their potential for long-term gains. The Magnificent Seven are not just individual companies. They're a collective force driving innovation and economic growth. The rally in tech stocks also signaled a resurgence of the AI trade, which had been facing some headwinds earlier this year. Concerns about economic uncertainty and potential slowdowns in AI spending had weighed on investor sentiment. However, Microsoft and Meta's strong earnings reports helped to alleviate those concerns, demonstrating that the demand for AI services remains robust. This is a crucial validation of the long-term potential of AI. It's not just a hype cycle. It's a fundamental shift in the way businesses operate. The AI trade is back on, and it's bigger and stronger than ever before. This also highlights the importance of staying informed and adapting to changing market conditions. The AI landscape is constantly evolving, and investors need to be prepared to adjust their strategies accordingly. One of the biggest beneficiaries of Microsoft and Meta's AI spending commitments was NVIDIA. The chipmaker's stock surged after the earnings reports, as investors recognized the critical role that NVIDIA's GPUs play in powering AI systems. NVIDIA is the undisputed leader in AI hardware, and its success is directly tied to the growth of the AI market. This is a classic example of a picks and shovels play. NVIDIA isn't building the AI applications themselves. They're providing the tools that everyone else needs to do it. This gives them a broad-based exposure to the AI market, regardless of which specific applications ultimately become successful. The rising tide of AI is lifting all boats, and NVIDIA is riding the crest of the wave. Looking ahead, Microsoft is doubling down on its AI investments. The company reiterated its plan to spend a staggering $80 billion on infrastructure in fiscal year 2025. This is a clear signal that Microsoft is committed to maintaining its leadership position in the AI market. This massive investment will enable Microsoft to build out its AI infrastructure, train new AI models, and develop innovative AI-powered applications. It's a long-term bet on the future of AI, and it's a bet that Microsoft is confident it will win. This also demonstrates the importance of long-term vision and strategic planning. Microsoft isn't just reacting to market trends, they're actively shaping the future of AI. From a technical perspective, Microsoft stock is looking strong. After successfully retesting the top trend line of a falling wedge pattern, the stock is poised for a potential longer-term bullish reversal. Investors should watch two key overhead areas around $442 and $468, while also monitoring crucial support levels near $395 and $359. These levels can provide valuable insights into the stock's future trajectory. Technical analysis is just one tool in the investor's arsenal, but it can be helpful in identifying potential entry and exit points. It's important to combine technical analysis with fundamental analysis to make informed investment decisions. The market is complex and unpredictable, but by using a variety of tools and strategies, investors can increase their chances of success. Now, let's be realistic. There are always risks involved in investing, and Microsoft is no exception. One potential risk is the intensifying competition in the cloud computing market. Amazon Web Services, AWS, and Google Cloud Platform, GCP, are formidable rivals, and they're not going to give up market share without a fight. Another risk is the potential for regulatory scrutiny. As AI becomes more powerful, governments around the world are starting to pay closer attention to its development and deployment. This could lead to new regulations that could impact Microsoft's business. Finally, there's always the risk of unforeseen technological disruptions. The AI landscape is evolving rapidly, and it's possible that a new technology could emerge that renders Microsoft's current AI models obsolete. Investors need to be aware of these risks and factor them into their investment decisions. No investment is guaranteed to succeed, and it's important to manage risk effectively. So, is Microsoft's AI-fueled stock surge sustainable? The answer is complex. On the one hand, the company has a strong leadership position in the AI market, a massive investment war chest, and a clear strategic vision. On the other hand, the market is competitive, regulations are evolving, and technological disruptions are always possible. Overall, I believe that Microsoft is well-positioned for long-term success in the AI market. However, investors should be prepared for volatility and should carefully monitor the company's progress. This is not a get-rich-quick scheme, it's a long-term investment. But if you're willing to be patient and do your homework, Microsoft could be a valuable addition to your portfolio. What are your thoughts? Do you think Microsoft's AI gamble will pay off? Let me know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the AI tech world. Thanks for watching.